market discovery rates are indicating. But whom do we have now? Well, Raamdeo Agrawal. Yes, the man as they call him. Raamdeo ji, always a pleasure to have you on ET now. I'm looking at your numbers for the quarter gone by, and while year on year there is a surge in profits, surge in revenue, growth in AMC business, growth in brokerage business, growth in every other vertical, but quarter on quarter there is a drop. Now for a business which should not have a cyclicality, why is there a drop?
Yeah, because see, typically we look at only year on year. Sequentially, because of something or other keeps happening, like in the capital market business, there is a bit of drop because of all the changes that are made in this options and futures. So that it hit us for 1.5 months. I mean, second half of November and full December. So clearly there is a sequential drop in that business, which is 60% of the total business. So yes, to some extent there is a sobering effect because of that. But otherwise, I think operating year on year has been very strong. Almost 48% growth year on year. So the momentum which we are which is built across the 9 months is very high, and same momentum we are seeing even for the current quarter, which is Q4. So operating side, I don't see any slackness in the momentum.
But just to talk about the broking business, Raamdeo ji, you alluded to a weakness which has come there. Volumes are already low. Exchanges have gone on record and they've said by the time the new SEBI law is implemented in totality, volumes may go down further. So can I say that the stress in the brokerage business will continue because it accounts for 60% of the business and that business could contract further?
So it's an emerging situation in the sense that whatever changes are there, that is taking effect and it is having its impact. But since ours is a lot more cash business, and of course we have a very large options business. Almost 50% is options revenue, futures and options revenue, 50% is cash. So the impact on cash side is less, and the impact on options future is a little more. But I mean, on the blended basis. But what is happening is that when we look at the whole company, the growth in the rest of the businesses, rest of the other parts of the capital market is more like 60 to 70%, whereas the growth for broking business will take a beating, and maybe for a quarter or two it could be lower sequentially, but year on year it is still high.
And the mutual fund business now, amid market volatility, the selling in mid cap and small cap stocks, do you think the asset management business could also see some impact, especially inflows into small cap, the new NFOs which you've launched, the PMS business, could that really take a hit also?
And capital market business is always, to predict anything is hazardous, I would say. But we had a brilliant December quarter. I mean, our net flow for the quarter, if I'm not wrong, was upwards of 25,000 crores just for a quarter. Before that quarter, it was, I think, 15,000 crores or something like that. So we had the record run, and so that flow is still on. So yes, it can. I mean, always these kind of things don't continue forever. They do subside. But you see, what is happening is the revolution, Nikunj. Broader thing. I mean, apart from Motilal Oswal, what is happening is that there is a first time the private capital flows, the risk capital is coming into the country, and the market is participating in unprecedented way, 3 to 4 million customers every month. So market is clearly horizontally expanding. The pace of expansion, say if it is say 2 or 3% per month on month, that can come down to 1.5%, or maybe for sometimes 0. But I would say year on year expansion. To say anything about in this fluid environment, to talk about a quarter on quarter is very tough. But if you ask about the broader macro kind of a theme, I would say the year on year 20 to 30%, 40% growth of the industry itself is clearly visible. Now, whether we'll participate, we'll get same market share, higher market share, that is a matter of execution. So I would not look at too much into one quarter here and there, but I think the expansion of the market, irrespective of what is happening to mid or small cap, Of course, if they're frothy, they are correcting. So last year, mid and small cap dominated funds, they beat the market big time. Like market did 10%, they did 30-40%. This is the year, my sense is 2025 will be the year when actually index will beat all these funds. You see what is happening. I mean, today it was very hugely contrast in the sense that one side the broad large index is up 1% and other indices they were down by 2-3% or maybe 4%. I don't know what is really the closing, but so that's the kind of contrast we had. We had last year when everything was working very well, index was very slow, but the market actually was doing very well. Current year, market is not doing well actually, but indices are doing very well. So it's a contrast.
Now, markets, Raamdeo ji, are big reason why IPOs have done well. IPO business is important business. Given how market conditions are, could the IPO business for you take a hit? And do you see that getting impacted in terms of your next 2 quarters?
The dynamic market and capital raising has been very robust, very consistent week after week, and valuations are also moderating. So what is happening is that the primary market is taking cue in terms of valuation from the secondary market, and they are giving 20-30% discount. If the secondary market is coming down by 10%, obviously the IPO price is also down by 10-15% from whatever it would have been. So clearly there is a continuous dynamic adjustment. At some price, promoters will say that I don't want to do it, and that will be the bottom of the market.
So how would you rate the current environment? I mean, valuations are not very cheap. FI outflows are strong. There is a fear of Trump war in the world. These are market conditions which in a sense are making everybody rethink and reassess their allocation to equities. So what would you in a sense characterize as the key, if I would say, key features of the current market environment for equity investor?
So, Nikunj, I mean, we have seen all this global geopolitical and all. It is very, very tough to fathom. I see 2-3 things. One is where the corporate earnings are going. You know, if the corporate earnings are robust going forward, I mean, company by company, industry by industry, or aggregate as a whole, I think we have nothing to worry at 18-20 P multiple. That's the average. 18 to 20 is the average for the indices and for the market as a whole. But if the companies are at 100 P multiple, 120, of course they are in a big danger of dramatic correction in their valuation. Now valuation correction can be 2 ways. One is the actual drop in price, and second is the time wise, you know, when the earnings pick up and the stocks don't respond. So both of them will happen. All kinds of action will happen. But if the earnings pick up, and I'm optimistic that in next 12 months, particularly in the first half of next year, the government expenditure will be absolutely normal, and budgetary allocations will be larger, and hence I would think that starting next year there won't be any elections, so there won't be any slowdown in government capex, and by that time even the credit flow, which was very constrained last year, would be under the new regime would be somewhat better, and we are seeing those signs. So I would think it takes time. It took time for the economy to slow down. I mean, what restrictions were taken, say 8 or 9 months back, is showing up now. So what actions you take now, the real impact will be visible after 6 to 8 months. But I would think the second half of 25-26 should be a bumper earning cycle.
You mentioned a tilt towards large cap stocks. Could that be a big message from Raamdeo Agrawal that the party in small and mid cap stocks is over and the store of value has now moved to large caps? And it's not that the first time, you know, Raamdeo ji, we've seen this kind of an environment. I distinctly remember between 2016 and 17 and 18, there was a time when only a handful of large cap stocks started outperforming and the rest of the market either was down or was in hibernation.
I would think that broadly what you are saying is the direction in which I am saying, but I would say much more specifically where the earnings are there, earnings growth is there, and the valuations are reasonable, even if it is a mid cap. But if valuation is right, there is no stigma against a mid cap or a small cap. If the valuations are right, they'll also fly. But as a group, right now valuations are far more reasonable in banking stocks and some large caps compared to mid caps and small caps. So clearly a broader move would be a lot more large cap centric than mid and small centric.
Raamdeo, if I may just request you to stay with us, I'll tell you what. I'll in ITC Hotels, the demerged entity, we know the offer price in terms of where it is, as we're going to make public. And you can see some, faces, of course, the Anil, head of ITC Hotels. You can see Sanjeev Puri, good old Ashish Chauhan. I'm afraid the rest of the board members, I don't recognize them, but there are a couple of familiar faces there. The chairman, Ranjit Puri, and the CEO of ITC Hotels, Anil, they both do the honors of ringing the bell. It is a demerged business of ITC. And it is important in a sense that it's a business which will not trade independently. The price discovery was 180 rupees. The fear there is that BAT may be looking at selling that stake, so that becomes in a sense a supply constraint. Also, they have a lot of hotels in Sri Lanka. So eventually they are owned by ITC. So could there be a fear of depreciation there which could kick in? But I do expect that now that you have a sizable opponent or sizable option which is now there in the public market, could money also start moving out of Indian hotels here? Because Indian hotels, and then you would drop all the way down to, let's say, Lemon Tree and then EIH. You could have compared Indian hotel with Oberoi. But now with ITC coming in, and it's not that they've got poor ratios, I mean their return ratios are quite decent. Could there be a competitive environment for investors who just want to choose in terms of the listing they say? So it's a great moment of joy for any management when you see your company getting listed independently, even though it's a business which has been incubated on the balance sheet of ITC, which started as a tobacco company. So the first business they incubated was paper, then they incubated hotel, then they incubated FMCG. FMCG business has a turnover of about 30,000 crore, which has turned EBITDA positive already. And the hotel business, because the cycle is an uptick, the number of rooms which they are managing, and properties like Shuri, what they have, those things in a sense would add to the luster of the stock. But they do have a presence in the luxury end of the market, especially Delhi. It's a formidable market for them. They do have a presence in other major metro. Some of the properties in a sense are very classic in terms of what you could recollect in Delhi. I mean Mumbai, where we live, there are two big properties. And I'm just counting the luxury properties, not even getting into the semi-luxury properties which are under the brand Fortune. Raamdeo, you've been a big votary of digital business. And the fact that you've just launched a Motilal Oswal digital NFO fund also. What do you make of this disruption which is happening in the digital world? I mean, if Chat GTP can be overnight challenged by DeepSeek, I wonder what will happen to the existing digital businesses in India.
Yeah, I mean, see, actually, what development yesterday you saw, that will actually help digital businesses in India. Because if, say, AI was to be used by one business or other, everybody will use it. And if it was costing X, now it will cost, say, 20-30% of that. So it will actually help. If you see yesterday in US move, I was watching it, actually only chips companies have gone down, but the chip user companies, they have gone up. So our businesses, they are the chip user rather than chip makers. So I would think that this is a robust business and very scalable, very friction free. And I mean, yesterday's move doesn't that much impact, but I would think the broad growth potential of this business still remain intact.
So how does your QGLP framework works here, Mr. Agrawal? Where in this market right now there is good quality available at a reasonable price where you can predict long-term growth?
Because the character of the market is very different from what we have seen in last 40 years. In last 5 years, market character has changed from say traditionally, in say 40 million demat accounts, your 35 million will be old and 5 million will be new. Now in 185 million demat accounts, only 40 million is old and 145 million is new, who have not seen the decline in the market or deeper correction in the market. 15-20% correction is very, very normal order of the day correction in any market. So if that kind of correction is there, I mean, of course, individual stocks might have corrected more, but I think portfolios have corrected more like 12 to 15%, 17% kind of thing, which I would say is quite deep. But yet it's not alarming for the amount of money people have made in last calendar itself.
So Jan 2025 is the starting point, which is where we are. On a 3-year basis, do you think both mid and small cap stocks can give a double-digit CAGR return?
See, what I would say is that if you have a diversified, well-diversified portfolio, on a 5-year basis, you should expect from the current levels, you should expect doubler of your portfolio. That is what, now whether it will be 1 year will be flat and the next 4 years will be good, or for next 2 years will be flat and next 3 years will be good, that I don't know. This year itself will be bumper. We don't know. So it is very, Nikunj, actually it is very tough to say anything, even if from the high of the market or even from a corrected market like current level, that what will be the actual performance in next 1 or 2 years. But we are committed for longer term, and my expectation from my own portfolio is always doubling in 5 years. I mean, sometimes it does 25% compounded, sometimes it does even 30%. And sometime between 17 to 20, it did very badly. I mean, it was actually more like 12-13% only.
All right, so a very important question, perhaps relevant and something which everybody wants to understand. Your thoughts on this. A lot of investors and traders, I won't use the word lot, but majority of investors and traders who have bought stocks because of tip in the lift, not because of insights. For those who have a very large exposure to small and mid-cap stocks, they are now on the receiving end of the market fall. What should be a basic approach? If you are in a stock which you don't understand, if your mid-cap stock has fallen 15 to 20%, what should one do? Take a hit, get out, raise cash, or move to large cap? Because you'll appreciate the spirit of my question, Mr. Agrawal. Capital is limited with everyone, and for those who are losing money in their portfolios, how should they approach it now?
Yeah, so they themselves are portfolio managers. They've decided to be portfolio managers, whether with adequate experience or not. They have decided to get into. In fact, yesterday I was flying and my friend asked one of the air hostess. She was saying that she not only does SIPs, she also does direct stocks. I said, God bless her, because doing this direct stock and with a very little competence, it is, and they don't have time. It is very tough to beat the market or do very well, and it brings all kinds of concern in your mind. So I would think that they should examine whether they're in the right kind of a trade. Can they handle direct stock portfolio? Otherwise, you have brilliant managers all over, and they can take care of it and still meet your equity allocation objective.
All right. So give us some pockets then, Raamdeo, where you think valuations are looking reasonable, where you think that if one is a genuine investor, if you can digest 10-15% volatility, your time horizon is 2-3 years, what is looking good and attractive in this market, and where one do you think one should be buying?
Yeah. See, valuation is a moving target, Nikunj. I mean, today, digital companies might have corrected by 25%, 30% also. Okay. So what level is the right level, that you can decide, but the sectors don't change. I mean, I'm telling you, the spots where growth is there. Best thing is, after 15 days, you'll get to see all the results. And you can go and see where exactly the big sales growth is there. About 25% sales growth is there. So I would think digital businesses, number one, capital market businesses, number two, then energy transition businesses, slightly cluttered right now, but energy transition business also looks good. So you have to, and then there'll be some new development about particular businesses like West Management and all. So, but then in larger segment, I would think that these are the segments which have done well in last recent past, and they seem to be they're in a secular move. Capital markets, your digital businesses, I mean, they are growing at like upwards of 25-30%, and at current prices, I mean, see, once they become busted growth stocks, like when they get busted in terms of their valuations, irrespective of their performance, I think that is a time to go and pick it up, and that's what is happening right now. A lot of these stocks are getting busted.
Now, Mr. Agrawal, so let's talk about something which you always advocated. Buffett has taught us something which I think should be adopted by everyone: buy fear and sell greed. Right now there is fear, greed is over. Is it time to buy them?
You said it. Right now fear is emerging. As I said, in the flight somebody asked, "Bazaar kab rukega?" So now the fear is slowly getting in. So I think this is a time to be really energizing yourself, getting yourself to buy into good stocks which you missed out last time, and now the same stocks are available 25-30% lower. So if you don't buy now, then when do you buy?
Agrawal, appreciate your time. Thank you for joining us, and once again thank you for being ET Now's knowledge partner on the budget day, and we look forward to meet you on the budget day.
Sure, we'll be there. Thank you.
Okay, that's an exclusive interaction coming in with none other than Raamdeo Agrawal, but a lot of earnings. By the way, the markets have picked up. We're back at that 23,000 mark, at least for the Nifty futures. Powering ahead today is Bajaj Auto after its earnings. Their strength, which is higher. BEL is seeing some buying. Hero MotoCorp, Wipro, Tata Steel, bunch of stocks actually are seeing a bit of a leg up. But still in the thick of earnings, so let me welcome on board Rahul Mithal,